Happy Friday, everybody. Thanks for joining me for this live stream. I've got some unpopular opinions, and that was one of the reasons I was a little bit off starting talking to some friends about Bitcoin because that's going to be the big thing for today. I want to talk about it. I want to talk about what this price action means, what some of the reasons are, because whenever something like this happens, people are always trying to come up with a reason to justify it. And I have given up on that years ago, trying to come up with a reason. People want to have like some sort of a connection to reality for what makes the price of something do something. And oftentimes, if that explanation is forthcoming, it happens way too late for anyone to make any money off of it. And so, what I do as a technical analysis trader is, of course, try to profit from just looking at price action. And oftentimes the news comes out after the fact, after the price has already moved, to justify it, or the news media comes up with some reason to justify it to themselves. And I find it all very useless for making money as a trader. And so I don't trade on news unless it's around like a news event like the FOMC meeting where price can create setups for me. But if you've been watching my live streams for the last few weeks, you would know that Bitcoin at 31,839.5, that's probably not perfectly what it hit and on every exchange, but that was a major resistance level. And I go back and forth with a lot of different people, and that's why I do these live streams, why I have a Discord, why I talk to people. Part of it is a little bit selfish because I want to get my finger on the pulse of what traders, what investors are thinking about. You know, when everyone is thinking, oh, this is the best thing ever, I mean, that's usually the top. And when everyone thinks this is the worst thing ever, that's usually the bottom. So I need to be plugged into that kind of stuff. So when I share my ideas to kind of get the conversation going, inevitably, if you talk to a lot of Bitcoin hodlers in the space, they'll say, oh, well, you can't predict price. It's unpredictable. And I think that's just projection. It's because people don't want to put the time into trying to learn some of the typical phenomenon of trading, of typical phenomenon of technical analysis that can actually help them see these patterns. Or they've tried it and it hasn't worked 100% of the time down to the penny, and so they discount it as astrology for men. And let's be fair, I'm going to be fair. It is a lot of times astrology for men, but it works often enough that you can't convince me that it isn't a valuable skill to have. And I wanted to kind of dedicate, hey, thank you, Raw Tesla. Yeah, by the way, got a nice little active comments going on here. I stream this, by the way, on Discord, TradingView, and YouTube. If you have things to look at as we get into the live stream, post in the chat. I'm going to get to them. I'll give you my honest opinion. I like to have that discussion. Sometimes people give me ideas for myself and the live stream that are trades for the next week. So definitely appreciate that. Thanks, Raul Tesla. By the way, did I tell you that I've become a Tesla maxi? Live is choking. What do you mean? Did you reload? Okay, if you have problems on TradingView, hit F5 to refresh. Let me check my bit rate. Okay, it looks I got a green on my OBS, so I'm going to hope for the best. So not much I can do to control that at this point. So I'm going to get into that. We're going to do a little history lesson. Good afternoon, Angie. I'm going to give a little history lesson on Bitcoin and why it stopped where it did. And I was in here a few weeks ago. You can go back through my old live streams. I do them pretty much every week. And right around the middle of June, the Friday there, you can find the screenshot where I was like, is the Bitcoin trend done or something like to that effect? Because what I saw at the end of June was the same exact signal that happened in January that made me go long. Posted on a TradingView because I want people to see this as a textbook example of where price was coming out of the Ichimoku cloud, and that signified a bullish trend was beginning in January. This is following the November FTX crash. And so onward it goes through the first half of 2023. And as long as it stayed above the Ichimoku cloud, it defined the trend. Remember that bank failure, uh, FUD that was in March? That was what brought it down to another critical level, a 50% level. Let's talk about that for a second. So another thing that I trust in technical analysis, let's just clean everything up right here. Clean up the chart. We don't need to look at anything else to distract us. All right. Another thing that I trust above anything else, and it comes from Fibonacci, but it's not using all the different numbers. It's just a simple 50% of a trend. It's just that simple. It makes for great buying opportunities, and that's exactly what it pulled back to in March of this year on the banking FUD that was dominating the market. And again, I said to people, hey, now's a good time to buy Bitcoin. See, when I say that to Bitcoin maxis, time to buy Bitcoin, it's already what they want to hear. And so they're happy to hear it then. And so as it goes up and up and up and up and up, just like Bitcoin signaled a bullish trend back in January to break out of the cloud to go up. Again, there's nothing magical about this. It's basically, again, the Ichimoku cloud is based on 50% retracements, but it's creating this sort of dynamic support zone to kind of let us see with our eyes very quickly at a glance, that's what Ichimoku means, where price is in relation to the trend. And then in June, once price crossed over the cloud again, I was in my trading and in my posting, I was like, okay, look, we're on the other side of the cloud. We poked our head out, but I got to take it as a signal that this is the end of the 2023 bullish trend. I said it, put my money where my mouth is in live stream on post, and according to my friends, and they're all my friends, I like them, I was wrong because it continued going up. Okay, that's fine. But you remember, as a trader, we're not really concerned with being right or wrong. We just want to make money. And if I say that I went from here to here, what have I done wrong? Nothing. But in HODL world, where everyone rests their entire financial future on Bitcoin reaching 100K and $1 million, any sign of it not proceeding inevitably upward is heresy and to be mocked and ridiculed. Well, what did we finally get back to hit this week? We came back last night to hit the exact level that I exited back in June. And that's because sometimes, or all the time, all the time, following your rules in trading is the best course to keep you out of trouble. Even if, and often if, price continues beyond it. I mean, you're never going to get what I call the tippy top or the bitty bottom of a trend. That's not what you should strive for. A lot of people, I think, they get into trading as amateurs and they really want to do that because it feels better. I want to buy that bottom. I don't want to feel any pain of a drawdown. So I want to have perfect technical analysis. And if I don't get that perfect technical analysis, it's all worthless. It's all worthless. And so they discount it. And in the process, they miss why Bitcoin touched this high here and triggered a short, because they decided that technical analysis wasn't worth anything. And for the exact same reason that Bitcoin held supports in March at the 50% of this trend at about 20K, the same reason that it held the support in June instead of what I thought was going down at 25K, the same reason it held each of these 50% legs, if we draw back and we look at the weekly and we take stock of this from the high in March to the low of November, that was the 50% of the weekly downtrend, the weekly bear market since March of 2022. And it kissed it and has run away from it. And now we're back into what's probably going to be a continuing nasty grinding consolidation. And that's the best case. The best case for Bitcoin bulls is that Bitcoin holds this support which is very key. And let me qualify what I mean by hold, and I'll use other terms like respect, like price respects a level. Okay, so price definitely respected the weekly 50% at 31,839. It respected, let's go backwards. It respected the 50% level, which was also a past high from the February highs here. Now, respect doesn't mean that it hits it to the penny and turns around. Respect means if you look at it after a few bars of closed, price has begun to stall at that level or turn around at that level. And that we can see with our eyes price respecting it. It knows it's there. It's like I get there, I see it, I flirt with it a little bit, I try to test it a little bit, trying to see if I can get through it, and then I don't. Or in the case back here, where when price got to that level, we saw that it did a spike out right here, which was very dangerous, which was the close of the long from here to here. That's the smart thing to do. And then respects it, and then finally does a breakout from it. So you can take respect to mean a couple of different things, but you need to respect the respect. And as we come to this level right now, we can see that this sell-off, and the reason that's being given is because SpaceX did a write-down, which doesn't mean they sold it, but it means that they wrote off the profit. Here's the thing. That's a reason they're throwing out there. It also makes for a pretty good clickbait title and thumbnail. But the reason is because people aren't buying Bitcoin right now. We don't live in the same interest rate environment that created Bitcoin. You got to remember, Bitcoin was created in 0% interest rate world, functionally 0%. And now we're at about 7%. You get 8% on a CD in some places. We're in a fundamentally different world than the last 15 years. And some people think that eventually the Fed is going to be forced by a recession to lower rates again. But I've been waiting for this recession for 3 years now, and it has yet to materialize. I've started to kind of wonder and question people when they bring out this narrative of the recession. Is a recession at this point, when it's used in common parlance, is a recession at this point a fear, or is it a hope? I think in a lot of cases, recession is a hope. I think a lot of people are so dejected and so demoralized that they would like to see a reset of the existing financial order in such a way that potentially they themselves can rise from it, because they imagine that, okay, I've got this money saved up for when everything crashes, and I am going to buy all the things when they are cheap, and then I will be wealthy. But for some reason, over the course of history, it doesn't really happen that way. Typically, when you have a massive sell-off, whether it's Bitcoin or real estate prices in a recession, nobody has money, and everyone's afraid to buy it. That's why it's priced so low. And so as long as people are sitting here doubting the stock bull market, the real estate market, and in Bitcoin land, hoping that the bottom is in, I just don't think that these things become true. It's sort of a sad irony in that regard. But back to the price action. What I think is the best case at this point is that price respects this 25K level. I'm not mad at people if they want to buy at this level, but I myself am short. I am betting, especially now since I've captured the profit down to this move, now that if my stop is above the high, I can sit here in a profitable position trying to play it down to a retest of the low. So the best case scenario, though, because I know a lot of people don't want to hear about the short case for Bitcoin. So let me give you the best case. The best case is that we consolidate again and we retest the highs, retest and respect those highs, and then do a potential breakout. That is the best case scenario, is a consolidation that may last for a while. But what you do not want to see, and we're going to talk about Tesla here in a bit because it's done what I said it should not do. So you got to Price moves between levels, especially when you have pre-established levels in the past. So if price breaks below the low, oh, there's my pen. If price breaks below the low it's set on this sell-off, then you have to presume the price is going to come down to retest the next level, the next support, which is going to be that March level. That's just the logical course of price. That, look, we don't have a crystal ball to tell us what it's going to do, but it's an if-then sort of statement. It's an if-then Boolean choice, yes or no. If this happens, then we look for this. If that doesn't happen, then we look for that. And so that's how we should look at this, is if it breaks the low that it's set here, because that's a major liquidation point, then it would continue further. This is exactly what happened back in December of 21. This is December, Saturday, but it really was more Friday price action. This was the jobs report. Now, what did the jobs report of the United States have to do with Bitcoin? Well, it was a precursor to interest rates rising, which people that got ahead of it correctly assumed was going to be a death knell for Bitcoin as the money printer going burr got turned down. By the way, if you guys have anything else to comment, I'll get to them in just a second once I'm done with my diatribe. And so back at that time, I said to folks, look, this was a major liquidation point, this December sell-off. And you have to think what time period, what mood we were in back in 2021, the end of 2021. There was still hope that this great bullish trend was going to go on forever. I mean, we weren't that far from 100K, were we? If you bought on this dip below 50K, you could double your money in Bitcoin, because everyone on Twitter would tell you that 100K is the conservative number it's going to go to. More likely, it's going to go to 300K. And so that sounds good for people's risk reward. They think they're being smart. But if you look at the price action, you knew that the sell orders, the cascade of stops, had liquidated people down to this point. And at that point, everyone was thinking the same thing. Well, okay, we don't want it to go lower than that. That's where the weak hands got taken out. So if we break that level, that means even weaker hands would go. Now, a break of that level doesn't necessarily trigger another liquidation point, but it gives us a line in the sand to go off of. And as we sat there and watched over the course of 2022, as it came to a close, we finally broke below that. And at that point, there was no technical reason that one could speak of that they should have been holding Bitcoin without any kind of hedging or protection. That's arguable, I know, but that's my opinion, and I stood behind it then, and I stand behind it now. I remember during this time period throughout 2022, the very popular thing was on-chain analysis. It's like, well, technical analysis doesn't work, so we're going to use on-chain analysis. The problem with on-chain analysis is it's worse than technical analysis, because I never read an on-chain analysis that said Bitcoin was a sell. Never. Not once. Every month there would be a new on-chain analysis. Oh, there's these flows that are going from big whales over here to exchanges over here, and that means Bitcoin go up. Every single on-chain analysis. And about midway through 2022, I thought to myself, I said this to some of my friends that kept on talking about on-chain analysis. Like at what point in the consistency of being incorrect are you going to say that this type of analysis does not work? And they were all like, shut up, you're not selling us a dream of financial independence and being multimillionaires. So we really don't want to listen to you trying to protect us from this impending down move. Which is why I do this. I really want people to be better traders and make better decisions. And I think you can do so if you just look at things objectively. And I think to say that I'm objective of Bitcoin is not exactly accurate. I've been in Bitcoin for over a decade now, and I've become a little bit jaded about it. Not because of the price going down, because it has gone up a lot in 10 years. It's because of how heavily regulated the Bitcoin market is becoming, and also becoming dominated by traditional finance. I mean, the way I look at it now, if you have three-letter agencies, multiple three-letter agencies, which is from the SEC to the CFTA and Commodities Futures Trading, yeah, to the IRS, all these organizations regulating it, to traditional finance like BlackRock establishing an ETF based on it. What is the difference between that and any other asset class? Now, of course, Bitcoin maxis will tell me, well, it's got a fixed supply. It's a superior asset class. Okay, cool story, bro. It's still a speculative asset. It's not money. I mean, go spend it. Number one, there's nobody that'll take it. Number two, you don't want to spend it because it's going up, right? So I treat it like any other speculative asset, and that means that you can chart it, just like you can chart the U.S. dollar, just like you can chart Tesla, just like you can chart the stock market. It is difficult, but not impossible. And you have to be willing and able to be wrong and go forward and say, okay, this time it wasn't accurate, but my risk was small. The next time it hits a level, I'm going to do the same thing, and the probability is going to be in my favor. And that's what you have to assume. So that's my 30-minute diatribe about Bitcoin. Yes, get your post into the chat. By the way, if you're coming in late or you're catching this late, I stream this on Discord every Friday at 4 p.m. TradingView, which I love because I do all my charting through TradingView, all my alerting too, and my scans actually, and YouTube. So if you guys want to catch it, the recorded versions are on YouTube and TradingView. All right, so let's take a look at some of the things in the chat, and then we'll do a little market recap and talk about some positions that I'm following. So, all right, Apple. We'll check at Discord first. Let's see, Apple. Apple in years past was the market, and I already have this marked off from a few weeks ago. Key levels here were the all-time high set in January of 2022. And then we had this big old rally throughout this year from January up until boom. And earnings really did a number. Earnings, as you see, this is another example of how levels kind of play out. Let's walk through this because I think I'm glad I marked this off and I'm glad I talked about it last week because this is a good learning experience. So as this rally went up, notice how it hit that previous all-time high. Definitely we'll look at ES futures here in a second. And it respected the level. In other words, it came up to that level, boom, went above it intraday in the middle of the day, closed back below it. Let's go bar by bar. Stays below it, and then in this pre-earnings rally, you finally have a breakout of that level. Notice how also you have this little pullback to test. These things are really key. Like, go up in TradingView and download that image, okay? That is a textbook example of how price will come up to a level, break above it, do a breakout, and then a pullback to hold that level. This is a really, really good setup because you already know what that level is. It's the previous freaking all-time high. It comes up, it respects it, it does a little number above it, and it pulls back to that. You don't need to take much risk to play that off of that level. For a short-term trade, that is, but it can also lead to a long-term. In the case of Apple, on the other hand, we had to wait, but that's a nice little trend pre-earnings off that level. And then, of course, earnings, being the yes or no Boolean choice as they are, tanked it, and then now you have a close below that level again. It's not good. So at this point, what's the next level it's going to come to? Well, you have to mark off the 50% of this bullish trend. That's your next support. Can it get there? Yes. Can it not get there? Yes. But if you're looking to buy Apple, that's what you have to patiently wait for, is for it to pull back to that 50%, just like anything else. I kind of want to segue that into Tesla because Tesla is another one where we had a level that at 260 that it tried to hold, and it did not. When it broke 240, what I've been saying all these coast for weeks is like, I had a good friend of mine who's a big Tesla bull. He's like, oh, I want to buy it at 240. I was like, no, 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 not 240, 200. 200 is going to be the 50% pullback of the year. What we're in right now in the stock market is what we haven't seen since March, which is a correction. This is setting up for the opportunities for the rest of the year. A lot of people are freaking out because it happened like all of them do after a big bullish run where everybody's making money and everything feels good and your account value is up and you just, oh, it's genius. But that's when price tends to pull back. And now everybody's like, oh no, I've lost money, even though I'm up more than I was at the beginning of the year. Woe is me. Market going to crap. I'm just going to quit looking. No. Mark off your levels, like that Apple level, the Tesla level, and give it a couple more days, maybe a few weeks, and see if we don't do some setups at that level. Some spikes, or just chart it out and look for it. So we are getting into opportunity zones now. I don't think we're there right now. But let's segue that into S&P futures. This is the same thing I would say for SPX. Oh, there's a really good trade today that I caught on futures. I need to talk about that too. Another key textbook example. I've got it marked up here. Let me not spoil it. I have a runner going into the weekend. It's a small one though. But we'll talk about this here in a second. Broadly. S&P 500, SPX, SPY, from the COVID low to the all-time high. Wow. Is that the 50% that it held? Very useful. And then on the way down, and then we've already passed this point, the 50% was around 41.55. Okay? Came up and held it once, twice, danced, and then what we had in these last few months was basically a break of that major resistance. If the market was going to continue down, if this bear market, as everyone assumed it would, not everyone, but if you go read financial media and the Twitterverse, they're all like, oh, you just don't know how bad it's going to get. Okay. The stock market goes up more years than it goes down, dude. Like, you don't have any more wisdom about how crazy and screwed up the world is than 1939, okay? Or 1969 for that matter. There's always chaos in the world. There's always uncertainty. And the statistics are what they are. Anyway, what the stock market is trying to do now after breaking this level is it is trying to retest its all-time high. Now, is it going to make a straight shot up there? No. So what are we looking for? Well, I've been looking for at least since we got this Thursday. Let's zoom into this one right here. Boom. Thursday, the 27th of July, gave us a little spike out right here. Spikes are another thing that I look for. False breakouts. This is an indicator that I coded. It's for free. And when I say that, I get about 2 or 3 people that ask me for it. You're more than welcome to. Send me a message on TradingView or Discord, and I'll give it to you. I'll give you access to it. Basically, it's nothing fancy, nothing crazy about it. It basically just helps you identify when price breaks a high and then closes back inside the consolidation, which I oftentimes mark off of this red line, which is the Ichimoku Tenkan-sen. It's really just that simple. And this can be such a powerful tool for finding false breakouts and reversals. And so that really kind of triggered this sell-off that we've been having. Now, what is this sell? What's the character of it? Here's a statistic for you. In any given year of the stock market, there are at least 3, on average, minus 5% pullbacks. We had 1 back in March. That was at 8%. We have not had one since. And so right now, this pullback on the stock market sits at By now we've hit the 5%. No, we're only at 4.69%. We still need to come back down and test this low at 5.6 well, it's 5.6%, but that low is at 43.76. Let's call it 43.70. I don't want to be looking at any longs until we get there. Man, it's just that simple for me. And what that also gives us, if you're listening to the beginning of the live stream, we're looking at Bitcoin. The trend of the year is still being contained by the Ichimoku Daily Cloud. And now we've finally come back down to kiss the cloud, which it needs to do. You can't have a trend just go straight up. When you have something like that, when you have a trend that just goes straight up, let me show you what happens when you have a trend that just goes straight up without a pullback for a year. Then you end up with basically the 2019, well, excuse me, that's the COVID sell-off. Yet this was, whew, man, this fortunately didn't hurt me that much, but this is what happens and when the stock market goes up without pulling back to the cloud for a long time. That's the 2019 FUD about interest rates. I'd have to go back in my history book and see exactly what the narrative was then, but that's what happens when you don't get a healthy pullback like we're in right now. You get a freaking disaster. So be glad for what we're having right now in the stock market. Trust me, I've been doing this for many years. Price has this, it does things, okay? It does things because it's based on people's emotions. And people's emotions, like we can weather a pullback like this. Like if it pulls back 5%, like most of your boomer, gray-haired holders are going to be like, yes, that's what the stock market does, and they're going to be fine. But when you have something go up really wildly and everyone gets leveraged long to the tits, that's when you have a real disaster on your hands, like in 2019. So, TLDR, healthy pullback. So what I would like to see, if we're going to mark these off for levels, is of course some kind of a test, which, I didn't even see that. Hold on. That was today. My bad, dog. Yeah. This is beautiful. Beautiful. Is that, yeah. I mean, today, even, I want to talk about this spike setup here. Independent of that spike setup, we basically hit a support, which is, we're now at the 5%. My bad. I didn't see that because I wanted to leave that on there. But yes, I didn't see that final bar for today. Yeah, there we go. My mistake. Mistakes are made. All right. But if we don't, then we need to look at the trend. And usually when I draw the trend, I try to hold it from the low that really started the trend. So that, well, that's there too. Okay. Market's at a support. You heard it here. And so today, going into that, what we had at the open, here we get into a little tutorial section. At the open, what I like to look for, and this is using the spikes, 9:30 a.m. Eastern. You can very often get some really crazy wonky price action. A little spike may occur. And what basically happened this morning was price came down to test and broke that low that it set at about 851 pre-market. All right, this is in futures. That's why I like to use them for because they're open 24 hours. This spike, you'll notice right here, has an ATR clear. What that stands for is average true range clearance. And what that means is from this little wick right here, the wick from the last low to the low of the wick, that was 161%, almost 1.5 times an ATR value. An ATR is the average range of the bars prior. And so what that does is basically tells me it's significant, especially if it's over 100%. I really want to see it over 80%. So that definitely fits my criteria. And in a case like this, I got to take it. I got to take it as a long, that this is a reversal. It's breaking a major low. It has a very high significance in terms of how much it broke it. And it's coming out of these major freaking levels. on the long-term daily chart. Wow, it's beautiful. And so what I'm going to do is I'm going to look for an entry point on this red line. That's just my trigger line, and it also serves as a nice 50% in itself. The stop is going to be just below that low, because if it breaks this low, like I talked about the liquidations in Bitcoin earlier, if it breaks that liquidation point, you know you don't need to be long. You know that goes into terms with let me say that the same thing applies with Bitcoin right now on the daily. If we break that liquidation point, you don't need to be long. And so that is the fundamental premise of how I try to trade these spikes. Oh no, we see the future, so forget you saw that. And then what I'm going to look for is I'm going to look for a 3-to-1 target, and that's where the little crosses up here are, is really just multiples of the risk taken from the red line to the stop, which is just below the spike. This is the 2-to-1 value, which is acceptable, but I want to see a 3-to-1 value. And as time went along, that in fact did see the reversal. And now the rest is history, and we basically come off that low from this morning. It all came from that spike, that false breakout at the open on S&P futures. We didn't even need to wake up before 9:29. Well, you might want to if you want some coffee. But that spike, I mean, these are just so powerful. When price thinks, it makes everyone think it's going one way, and then it slams back into the other direction. The two things that I trust most, and they're equal footing, is a 50% retracement level and a false breakout, or down as the case may be. Those are the two technical analysis components I think are the most valuable. I would say a distant third is the Ichimoku cloud, and that's just because it's more of just a sentiment tool than an actual trigger. It can be used for breakouts if one were so inclined. But this indicator that I made is nothing magic. It just helps me identify it. It doesn't help you identify everything. But what I want you to understand, if you lost all sound, hold on a second. If you guys ever lose sound or picture on TradingView, hit F5. And yeah, sometimes it's slaggy. So thematically, I want you to understand as a trader, whether you use any of my methods or not, to think like the person that's in trouble. Think like the person that is long. Think like the person that is short. What are they feeling? What is the worst thing that can happen to them? What will make them panic? What will make them sell? What will make them buy? That is the answer to that question is oftentimes going to be the best setups that you can try to play. Back in November, with the Bitcoin and Ethereum markets being as they were, November 2 years ago, time has that thing of doing where it passes, Bitcoin was failing to effectively close. It pushed, it made new highs, but every high that it was making was closing below the last one. That's not what you want to see for something to continue going up. You want to see a big green closed bar to let you know that people have continued buying it through this price action. Tried to sound the alarm for people then, but a lot of people are going to be locked into their bias on the fundamentals. Fun to talk about, but you really have to, this is simple technical analysis stuff. This isn't reading astrology. This isn't like looking at the moon cycle for turning points. This is really just thinking and extrapolating human psychology. That's what I think is probably the most valuable. I can kind of extrapolate that human psychology component to my 50% levels, because what that means to me is if half the people have continued buying it, if half the people are holding, well, 51% of the people are holding, well, then it should go up again. If 49% of the people are holding, that should break that level. That's really kind of BS. It's just really a level, but it works. It worked when Bitcoin hit the 50% of the March high to the November low, right there at 31,839. Just as it worked in March, just as it worked in June. And so to circle back to Bitcoin, because that's really the interesting thing of today, we really have to look at Bitcoin when it gets down to 24K. Unfortunately, what that means on a daily time frame, which I use for trend analysis, Bitcoin is already in a bearish trend. So I do not have high confidence that it would stop at that level. It may, but it's not as clear a level, and Bitcoin is in a bearish trend. And then if you zoom up to the weekly, like, understand this, there's never been a bullish Bitcoin trend that violated this rule. It's always going to come above the cloud and trend. And when it does, it trends big. And so my message to people is to just look at this. Just watch it. Just play that. You're not going to miss it. You're not going to need to FOMO it. It should be clear. And so that being said, because of the big bearish 2022 that we had, this 2023 bullish trend, which people have gotten really excited about, only came up to touch the top of the cloud. On my Bitcoin short, I am wrong and I stop out when we break the high of July, which would also signify a potential bullish breakout on the weekly. And at that point, we can start looking for longs, but not before. I'm not concerned about missing out on catching this as a dip buy because of the risk, the real risk that this thing can go down to retest the low, which a lot of people don't think it will. But then again, before last year, people didn't think it could go down as low as it could. There was a meme. No Bitcoin bear trend has ever broken the last all-time high. Well, that got thrown out the window. There was all this analysis of the halvening cycle. That's what a lot of people challenge me on now. It's like, oh, well, why are you selling now? Don't you know the halvening cycle is happening? And every time Bitcoin has gone up before the halvening. Nothing concerns me more than a 100% bet. Especially when your end value, your number of instances that you're observing is 3. I mean, yes, that is a true statement. But one of my favorite trading books, when people ask me what book should I get for trading, Trading in the Zone by Mark Douglas, the TLDR of that entire book is just this. Every chapter is basically just this right here. Anything can happen. And a trader has to internalize that. You cannot be internalizing a sentiment that because something has happened 3 times before, it is going to happen again, for sure. Therefore, bet the farm, house, commercial property, whatever. Like Michael Saylor told everyone to do back in 2021. My buy point, where I really get interested in Bitcoin again, really interested to buy more Bitcoin, a substantial amount, is not really a price, because I don't know that price anymore. In 2022, I made this prediction that my buy point for Bitcoin was going to be, it was June of 2022 when price was somewhere around in here. My buy point for Bitcoin was about $3,500 Bitcoin, which was crazy at the time. Still is crazy at the time, right? But that was because that was MicroStrategy, Michael Saylor's company's liquidation point on Bitcoin. I feel that, let me pull it up here. This is an old chart, but it checks out. I need to update this chart, but I did this for a post a few years ago, And this is a chart of MicroStrategy. Basically, I need to update this with since then, but on basically a zero or very low interest rate loan, Michael Saylor was able to buy Bitcoin on debt. He bought 0.65 billion, $650 million of Bitcoin in December of 2020. Not a bad buy there, in the lows. But then he doubled down at in February of 2021. This is the stock price, by the way, but the price of Bitcoin was, of course, going up too. And then he bought more on the dip, or at least what he thought it was a dip, $400 million worth. And it's not quite back to that point. Now, he's also been leveraging his share prices for buying more Bitcoin. And kudos to him. Kudos to him for sticking to his guns, putting other people's money where his mouth is, and buying Bitcoin, and then going on podcasts and TV and talking about how everyone else needs to pump up his bags for his personal gain. Kudos to him. Really great individual to tell people to mortgage their houses and their businesses to buy Bitcoin at 50K Bitcoin so that he would become the world's richest man. That's a really stand-up thing that he did back then. And I think he really deserves what's coming to him. And it's not just poetic justice for him to get liquidated, but it would be the single biggest catalyst in Bitcoin history for a sell-off, and therefore the biggest opportunity. And so my buy point for Bitcoin is when MicroStrategy gets liquidated, when they are forced by not being able to refinance their debt to sell Bitcoin to service the debt that they have, which is substantial. Now, things don't really get real for them until 2025, when a lot of these purchases from back in 2020 become, they mature. In other words, they're forced to pay back these loans. They got these 5-year kind of term. They've got a lot of different loan products out there. But in 2025, things get real for them. That's when I think I need to go back and look at the fundamentals, their quarterly statements, but I think that's when the bill on some of these loans gets due. They had a 5-year term on some of these at 0 or 0.1% or something like that. Well, now interest rates are at 7, and so there's a lot of ifs that they assumed, a lot of people have assumed, are going to just work out for them. In other words, the recession's coming and Feds are going to be forced to lower interest rates. What if they don't? And Bitcoin, it has, maybe a 3-year tops bear market, and after 3 years, no other Bitcoin bear market has lasted that more than that long. So that's as far as down as it'll go. You hope. So there's a lot of what ifs in here, and doing this as long as I have, reading stories of other past failures like long-term capital management, the dot-com crash, the housing market crash, speculative frenzies of cotton back in the times of Jesse Livermore. These themes across history of hubris or overweening pride in a financial asset, they rhyme, and I see that in Michael Saylor and what he's doing, and they don't end well. So when that comes to an end, whatever price Bitcoin is at, that's an opportunity. And that's probably going to be the best opportunity in the next 10 years, whenever it occurs and at whatever price it occurs. And so when people ask me, well, when are you going to buy a Bitcoin? That's my answer. And it may take a few years for me to be correct, or it could happen next week, who knows? But I've got to stick to it, and that's what I've decided since I started paying attention to his shenanigans. And I'm going to stick with that thesis. It has not changed. And, of course, a lot of my Bitcoin friends, they've been talking about buying MicroStrategy as a way to get Bitcoin in your 401k. And MicroStrategy is going to start. I've already got this marked off from probably past live stream sessions. But that 300 level that it needs to come back to, that's going to be a key level for MicroStrategy there. And it's making its way down to it. We'll see where it gets there. All right. I've been ranting all. I need to catch up on some questions. All right, let's see here. Let's see. What do okay, ISRG, that's a surgical company, right? ISRG. That's making a nice little healthy pullback. Let's go on the weekly on this one. Help us out here. I bet you that if we look at the trend from the bottom of October of 2022, you have a pullback level. Let's call it 270. The more short term from March of this year to here, it's already kind of come back to and closed below that 290 level. And so what I'd rather, and let's just go ahead and chart the COVID low to the all-time high, because that's going to create a major level as well. Yeah. So these are going to be your major levels. I would actually say that you have to look at the bigger trend and include. This is kind of nebulous here as far as 50% go, but what I like to do is look for the big trend because I want the biggest opportunity. And so the low here on earnings back in October 22 up to the high that was set in July, that gives us a level at 270, which you can also see is there's a lot of price action inflection there. That's when I say, oh, and it's a gap level too. And you got this gap. So it's on its way there, 270. Look for some sort of a setup at 270. I say setup because I got to do that whole disclaimer hashtag, not financial advice, but look for a setup at 270. All right. We did the futures. Can I say a few things about order flow and footprints? No, I cannot. Are they useful? I don't know. People, the way I've always felt about order flow is I'm made up of carbon, mostly water. Basically, I may have hydrocarbons, right? Carbon, hydrogen, oxygen, and then trace elements. The type of people that can trade order flow, it's so fast, milliseconds fast. Those people are made out of silicon. They are computers. So being a carbon-based life form, I can only move at the speed of about a 1 minute chart at best. And even then, sometimes it'll catch me off guard. Any quicker when you're sitting there trying to, it's not really something. Okay, I tried it. I tried it a few years ago. I tried it back probably around 2017, 2018. Trying to see, because that was kind of like all the rage. That's when penny stocks were kind of going crazy back in that time period. And I found myself sweating, physically sweating by 10 a.m. Like the open was at 9:30, and by the end of that 30 minutes, I was like physically, my pits were like flooded. Not for me. So, is it useful for me? No. Can you make it work for you? I'm not going to tell you that you can't do something, but that's my opinion about it. So, good luck. All right, let's go back through the charts here on TradingView. Let's see. Hopefully, we got things settled. Hey, what's up, Casey? Sorry, I was ranting all through the podcast. Let's look at your breakouts. I like Casey's breakouts. A&F, Abercrombie and Fitch. See, look at this. Look at this. Look at this. Market go down. Some things are still going up. There's no reason to be mad at the world. There's always opportunity out there. I like this. What I like about this, and of course I didn't catch this, but if we go back and look for the low to the high right here, man, look at that. Look at that. Oh, look at that earnings hit. Earnings at a 50% rocketed off that level back in May. Wow. Wow. That's amazing. What's your target on Abercrombie and Fitch? 46.50. Okay, so you're doing a short term, try to retest high. I like this. I like this. Not one that I would take because I want like big risk reward, but to play it from here to still get to the high, that's good, and then leave some on for the break. I like it. C, I think that's Sealed Air. After a while, you kind of short. He's playing the breakout short because it's a $35 stock. and you're probably trying to do a retest of the low. This is another good learning experience. So what happens when a 50% is broken? Notice how we also have a little spike indicator right there. It can go both ways. You get to this little spike, which is also at a 50%. That is a level to look for something long, but what happens if it breaks it? This happens so much. This happens so commonly. It breaks the low from the 50% that it held, which is also a spike, comes back to hold that 50%, and then down into what I call the valley of risk. I like this. I like this short a lot because it's come down to the 50%. It had its chance. It failed. It broke it, and it came back up to hit that same level as resistance, and now it's falling off of it. That is good. Now, where it's going to stop, nobody knows. If I were going to mark off a target, you really can't go for the bottom because sometimes it plays off base a little bit. But I like to look for a 50% of the bottom move, basically the rally there. And that oftentimes comes up to be an inversion point, a turn, a Tinkinson turn or TS turn. The red line there, which I use as my triggers, the Ichimoku Tinkinson. And so that lets me play off base at 24.23. And you had your price target at 29. Oh, come on. Let's live a little. 29, live a little. See if that can't get down to 24, 23. Well, it's your trade. It's your trade. You play it how you want. But if this thing is going down, see, the Tesla did something like this. Tesla did that same thing where it came down and actually, this is an example. It came down, held that level, flirted with it, went down, tested it, short here. And the only reason I didn't take that down is because I was really looking for a long, and the long of Tesla was 160, which was also the 50%. That's what I've been looking for a long time. Zillow is kind of the quintessential example. I have it still marked off from live streams in the past. What happens when you lose your 50% level and how far it can go? So Zillow is where it came down back in May of 2021 to this level, did not hold it. I went long, I'll admit it. I went long on that 50% and then got out at 101, just below 100. And then before that, that's why you get out of things when they break the 50%. Comes down and it goes down, 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 and you don't know where the bottom is. But notice if you had taken, this is the COVID low, from the COVID low to the rally point. Basically, this is a daily chart, so 1, 2, 3, 4, 5, 6, 7 days from the 18th of March to the 25th of March, that little COVID rally, back when everyone was afraid the world was going to end. What's funny is I kind of knew that the market was bottoming. I promise. I knew because I went to the grocery store, and every morning for breakfast I eat oatmeal, and for several weeks there was no oatmeal. I was luckily I had a stockpile of oatmeal. But on, I think it was March the 18th, where the market bottomed, I went to the grocery store and they had oatmeal. I knew things were about to turn back to normal. Now, that I just go and buy everything based on that? No. But I thought that was kind of cool that I saw that as a reason why we bought them. It's because there was oatmeal in the grocery stores again. Anyway, that little rally right there, which I also kind of respected, is essentially where if you were shorting Zillow, let me zoom this out. If you had gone short from that level, that breakout way back up here, that would have made for a very good price target. Did you capture everything? No. It went a little lower than that, but again, it didn't hit the very bottom. That's very hard for something to hit the very bottom. Also the very top. Don't really want to bet on that because oftentimes it's going to fall short and it's going to piss you off. And so as a general rule, if I'm playing for a bottom, I'm going to look for that little element of price action right there, basically where price hit it and made a little bit of price action of a rally or a bounce off of it, as the case may be, and then that's going to set up as a target. And so in the case of Sealed Air Corporation, if you are betting on it going down, then I want to use that 24.23 as a potential target level. It's just a good rule of thumb that I go by when people ask me, well, where's your profit target? That's how I find it. That way it lets me play off base and not, miss it. If it breaks the low, then it can set up for another trade. But that's generally why I do things weight up. All right, let's see here. WWE, is that the World Wrestling? Yeah, okay. That's another great thing this year. Look at that. I mean, everybody's like, oh, the market's going to crap, recession. I mean, clearly, I don't want to. I'm trying to think of a word of like acting or whatever, but I mean, come on, it's entertainment. World Wrestling Entertainment is still very, very popular. So, yeah, very good. Nice little earnings spike. Oh, speaking of that, I need to go down my watch list here because I'm already past 5 o'clock, but I want to talk about some things. So Rivian is one that has been kind of like a little pet stock that a lot of my friends have been trading. Still got it marked off right here, but the key level that I really wish that they would have listened about was the high back in September down to the low in April. That set up the 50% level at 26.27. So this big, nice, bullish move that happened up till here, that was over at that point. Now, there was still money taking 0 data expiration options all the way up until this kind of a blow off. But fundamentally, that was where the trend ended. And now what has it done? It has pulled back to its own 50% of the June to July trend at 20. Let's call it 20 for simplicity's sake. And then earlier on my Discord, somebody pointed out to me that it did a spike out of that level. And right now, it looks like today, it hasn't come off of it very much, but 20.68 is a support that is holding. Very clear. It's almost doing the kind of like a Tesla-esque hold of the level. Hey, it's an EV stock. I guess they all move kind of the same. Palantir is another pet stock that I know a lot of my friends have been trading. And again, it had its same 50% level, which it did blow past, but that's why you have to respect these 50% levels. You need to do something. You need to take some profit. You need to hedge yourself. You want it to break it, but you can't get a guarantee that it is. But man, are they some powerful levels. And whether it stopped here on this week of July, where it poked above it and then closed back inside of it, I mean, if I see something like this, there's no way that I'm going to hold it long. Doesn't matter to me if, the next week it comes in and does something like this. I'm not going to regret my decision because more often than not, you end up in a place like this. Now it's a spike, which in itself I really don't want to take, but you know what? I would be interested to see if it pulls back up and what it does here. But what we have to do is we have to measure that out and see that 1308 is the next level for Palantir. So we'll see what happens there. Quick go down the list. TLT. I'm long TLT still from the beginning of the year, and I am hoping it makes a double bottom and doesn't break that low. Got an alert set there to close that out. We'll see what interest rates do. Gold. Gold is still a false breakout. Yet another false breakout example. I got it circled right there. Let me take the little circle off so you can see it. So the high that was set in March of 2022, in May of this year, 2023, it went up. Got a lot of people posting about how gold was a buy. Slammed back down within that week, and that was all I needed, in addition to the indicator firing on the daily, to know that this was a false breakout up and to go short. And so, though it has decided to dance around a little bit, come back up to 2,000, hold 2,000 as resistance, I still remain short down to 1850. So that's gold. Oh, Microsoft. Yeah, I remember that one. Microsoft, that's another textbook example. I haven't followed up on that. That's go to the weekly. That's a spike again, right there at the all-time high. Oh, why do I got that line right there? Oh, there. Okay, yeah. I mean, it's not nice if you're long Microsoft, but that is another textbook example of a false breakout. I need a list here beside my computer. I think there was one last year in Lockheed Martin. Oh, there it is. Yeah, Lockheed Martin. Got a little arrow to it as well. So I did remember that correctly. It's just when people tell you that technical analysis is useless, they're looking at these people that have 20 different indicators on their chart, and they're trying to predict things to the dollar, to the day. Go to a weekly on a candlestick chart and see where the week closes relative to past highs and lows. Just start there. That's the beginning of your education. That's kindergarten for technical analysis. Is candlesticks basically. It's like learning your ABCs, and I don't mean learning all the candlestick patterns. That's like special gifted school. You know, you take the short bus to there because they got to teach you a bunch of. It's like the multiplication tables, which, I mean, are you ever actually going to use? No, that's not a good example. It's like calculus. Anyway, oil, bullish again, came to the 50% level. This 50% again is drawn from zero because, as you recall, back in 2020, oil was not only $0, but it was also you get paid to take oil, which was absurd and not true. I think if you look at some ETFs, it's a little bit more clear the 50% level, but essentially oil hit a support and stays above it. Dollar is another 50%. They got a little wonky, but still remains holding that level. So dollar is getting stronger still this week. Stock market and dollar tend to work inversely, so that's understandable. Bitcoin, which we talked about at length, Bitcoin held some weeks ago the 50% level from the leg down from April to November. It is now traversing. I mean, if you look at it in this terms on the weekly, it makes it pretty clear that what it wants to get to is 24. Of course, it has to break this low right here, but you know, here's the thing. As we were looking at, let's just say MetLife, for instance, you know, MetLife is another 50% level, and when you're playing a 50% level, you're basically taking stock of the existing trend. Hold on, I'm going to bring this back to Bitcoin. And I know crypto people are like, you can't compare Bitcoin to stocks. Whatever. It's all price. It's all based on human emotion. It's all based on what people think something's worth. When you base a 50% off of a trend and it holds that 50%, you're playing it to try to retest the high or the low, as the case may be, of that trend. And so with Bitcoin, if we are playing this 50% level, then we have to assume that it's going to complete to retest the low. And that's my sentiment, and that's where my position is right now. So Ethereum, it's at this point, it's pretty much just going to follow Bitcoin. It, though, now just analyzing it, it liquidated beyond the June low. So it's in an even more precarious position. XMR, which I like the most because it is a privacy coin. It is the most used privacy coin. Let me just be open and honest. Let me be forthcoming. I, in months past, have been very, very bullish fundamentally for the use case of Monero because it is privacy based. As I see more regulation coming over the crypto industry, as I see more traditional finance starting to get into Bitcoin, I become less interested in Bitcoin. I've been more interested in the original ethos of crypto, which I believe to be privacy. Unfortunately, as I continue to go through my thoughts and try to ascertain philosophically what was true, I realized that people don't care about privacy. I mean, from our cell phones to our browsing history, to our bank records. People choose consistently convenience and monetary gain over privacy. And so to think that privacy would be a necessary bull case for a cryptocurrency, I have to admit now is probably not true. That doesn't mean that I am bearish on it any more than any other cryptocurrency. It just means that I can't say that my original bullish case for Monero is something that I really believe is true anymore, now that I've thought about it some more. I think that it's a fantastic store of value. In fact, through the bearish trend of through the bearish trend of 2022, Monero was actually a better store of value than Bitcoin. And as Bitcoin goes down, now of course it lost that as Bitcoin went up, the relative value of Monero to Bitcoin went down because Monero did not go up as much. But as Bitcoin has entered into a bearish phase, it once again seems that Monero is actually proving to be a better store of value than Bitcoin in a bearish condition. So I do think that once again, if we resume a really scary bear market in Bitcoin, while Monero will go down as well, it won't go down as much as Bitcoin. That's my speculation. Amazon. Ooh. It has come back down and broken this key level of 134. I am long Amazon from this year from 94 and 46, so we're okay with that. But we need to be paying attention to what it does here at this 50%. Remember what I said? If I see something hit at 50% and then do a spike out, hasn't quite done a spike out, but we need to see, and we may very well see it hold here and then continue upwards. This could either be a great opportunity, one of the last opportunities to catch it before it makes its full retest of the all-time high on Amazon, or if we stay below it, it could be not very good to this bullish trend. It really kind of depends on what the market does. Activision Blizzard, it's going to do what it's going to do. Caterpillar, still holding. This was a 50% level back in September of 2022. The level that we picked it up this year was actually back. Let's see, where's the... I actually got it on March because it was a spike there. But again, 50% level from the low of September 2022 up to February. Again, 50% level with a spike, false breakout to the low side, and then up it goes. It was a little dicey there to hold on to this for most of the year, but it paid off. Let's see. Kroger, because Jen will be mad at me. Had a little spike here, but it's in the rough. Broadly speaking, Kroger is a weird stock. It's a grocery store, but the key level there is still 42.50, and it's holding just slowly. MetLife we talked about earlier. This was a pickup from May. Fine. NCLH is one where I finally had to start cutting it. I think last week and 2 weeks ago because it broke below. See, the key was we had this high back in February. Picked this up and back in March. Had this big rally. But when it started failing out here last week, I started cutting off more profit. I was taking profit along the way, but I'm still long it because I think long term it still has more to go, but that trend is pretty done. Home Depot, yet another 50% level. Let me bring this back up here. This was a 50% from the March COVID low to all-time high, like lots of things. It kissed it on earnings back in May, which I know I made a post about. It's another false breakout spike. That's a beautiful setup, and onward it goes. Trust me, Home Depot's making a lot of money. I've spent a lot of money on my rental properties in the last few weeks, and that's where I go. Yeah. Banks. TFC has been my choice for banks. That's Truist Financial Corporation. And right now, even though the price of the stock is not going as gangbusters as one might like, let's look. This is a dividend play. Because a little fun fact about Truist Financial Corporation is that going back 20 plus years, back before they were Truist, back when they were BB&T, and before that, when they were other regional banks, they're basically a conglomeration of lots of little regional banks in the Southeast United States. I know it because I've been invested in them going back a long time for BB&T. And so one of the fun facts about Truist as a legacy company is that they have not decreased their dividends even back in the 2008 financial crisis. And so right now the dividend of Truist Financial is 7%. You can get that on a CD probably if you go in there, but uh, that's a good return. That is a good market return right now at the current valuation. That's basically what the market's pricing in. So uh, I still remain bullish on that. Tesla, I want to see this thing come down and hit 200. That's what I've told people in my Discord that have asked me. People that didn't listen to me at 160 throughout this whole bullish move, they've been like, "Oh no, we missed it. We missed it." I was like, just don't rush into Tesla. I'm very much a Tesla maxi at this point. I love the Tesla that I have, and I think Elon definitely has a good business model, especially as all the other companies are finally getting on his supercharger network. Although that aggravates me as an elitist Tesla owner that I don't want to see non-Teslas at my chargers. I digress. 200. Watch for 200. Waste management. Yeah, there's not much to talk about there. And then that pretty much gets through the list here. So yeah, let's see if there's any more questions to take a look at. Can we? Okay, so we did that. What do I think about ARC? Kathy was like a trader sex symbol. For real. Like there's a lot of people that are like really attracted to her. Back in 2021 when she was making sick gains. She needs the market to go in her favor. She needs growth to get hot, and it was getting hot this summer, and now it is not. I think that I respect Kathy as a trader. I respect her as a trader that she takes, YOLO plays. I would say my gut thing is here is I need to try to be better than Kathy. I may not always be better than Kathy, but having a little bit of boring stuff like Truist as a dividend play, as opposed to being 100% growth, means that your volatility is going to be somewhat diminished. Having a little bit of Walmart in there, having a little bit of waste management, that's just going to be more my style than doing what Kathy does, which is invest in moonshots, literally. And so I think it's a good sign that it has found kind of a floor, but I would rather try to invest in individual components rather than this ETF. Investing in ARK is kind of a I'll say it, it's a lazy way to try and invest in growth. Do your own research, find your own setups, draw your own levels, and try to play it better. Or if you don't want to do those things, you basically say, Kathy, take the wheel. I want YOLO gains at the expense of YOLO downturns. And so you do what she's doing. It's basically, you're buying Kathy, basically, her fund and her ideas. And if you like it enough and you just don't want to do that extra work of finding your own opportunities, that's your bag, but you're holding it still. All right. How do you use the Ichimoku Cloud Indicator? Do you use it just as a baseline? I was talking about this earlier, and the big use that I always go back to is with Bitcoin. And I use it primarily, well, I use Ichimoku in everything I do. But it's not always on my chart. It's because I spent almost a decade learning and using it, mastering it as a trader. And then I took the fundamental components out of it, which were basically 50% retracement levels. That's where I got a little indicator there. You can actually find that for free. You don't need my permission. Do a search for retracement levels on TradingView. It basically just draws a very long-term 50% level, which oftentimes you'll notice matches up with the cloud. Okay, because the cloud, the SKB Senku B component of the cloud, the big thick part of the cloud, not the white line, that ends up being the 50% very often of major trends. And so, because I like nice clean charts, you'll see that I'll oftentimes take Ichimoku off my chart. But one thing that remains that you'll notice is this little red line, which is the Tinkinson. And because that's kind of like my day trading, my trigger line for my spikes. So my spikes are based on Ichimoku. My 50% are based on Ichimoku. So everything that I do is basically based in Ichimoku. But I kind of just take it off of there because it kind of clutters your vision, because there's a lot of stuff for your eyes to kind of focus on and get confused by. There's a lot of things in there. And so I just kind of take a step back and I distilled it down to its basic components. But I'll put it back on there to show me when price gets outside of the cloud at the same time that the Senku B, not Senku, excuse me, the Chikao, and I'm pronouncing these because I don't speak Japanese poorly, but when this happens, that is a trend change that has been phenomenally consistent throughout Bitcoin's history as well as other trends. And so if someone's asking me for an analysis of something, I'll bring up Ichimoku to say like, okay, it's bullish or bearish. And then I'll look for this particular setup on Bitcoin as a break of the trend and a confirmation of that trend, basically. And so from there, you can look at this from this perspective. One second. Okay. So in this year of Bitcoin, Bitcoin has done 4 major things so far with Ichimoku Cloud. It set up a long breakout back in January, and then that ended, technically speaking, even though it's kind of like a little bit of a B, when it closed below the cloud at the same time momentum closed. And that's the nature of any technical analysis that gets people and makes them kind of turn away from it, is because, oh, look at that. Look how like it gave a signal and it was wrong. It happens. You still have to trust it. And then, of course, the third was when it closed above the cloud here at the same time that it was going long here. All right. So let's just play out this from this year from a Ichimoku standpoint. All right. How useful is it, even with that little false signal? So, or 2 false signals, basically. False. Let me show you. So let's just say that we take a 1-to-1 trade with risk down to here, all right? And then we let that break out right until we get the confirmation to exit it here. So basically, we were able to capture about, 63, let's say we're trading 1 Bitcoin. We were able to capture 63.20 of profit like so, okay? Not going to use percentages. I'm going to keep things simple, because we're getting into the end of things right here. So that ended the bullish trend there. And so now we want to take the bullish trend again. So we wait for this to close up here. We're going to give it up to the top of the thing here, the bar to close. We buy it there, and we do a 1-to-1 like so. All right. And then we take it down to here. We take the bar. We do the worst case scenario where it goes close to close. And let's see. Well, no, let's do it even close to close. And so what we did was we lost 24.50 on this. Wait, that's more. We lost about 3,200. We lost about 3,200 on that. We're still up about $3,000. As traders, we're still profitable using this year. And that's not even accounting for the fact that it let you cut your Bitcoin last year at 49K and not take this drawdown. Had a little thing in there, but you were able to avoid this entire drawdown, and you were able to capture Bitcoin when it came out of the cloud here. Again, trading a system is about consistency. It's never going to tell you the exact perfect result, but even taken consistently, even with losses, it still puts you ahead as opposed to trying to just guess. So that is the way that I like to use Ichimoku for trend analysis as well as looking for breakouts, especially on the Bitcoin daily. So you studied Ichimoku for a few years? Yeah. All right. Let's see. What else? You guys got anything else to talk about? Thanks for being very active today. I appreciate it. Cartel money still has to go somewhere. There's a lot of theories out there that this recent move in the stock market has been predicated on foreign investment coming in, and maybe, like, I'm never going to know these things. I'm not going to know the truth behind all these things. No one's going to tell me what the reality is out in the world because there's other special interest. There's no need for me to come up with conspiracies about it. I draw my levels, I look for my spikes, my false breakouts, and I take trades. That's all I can do. All right. Thank you all for joining me this Friday. As always, I saw a lot of friendly faces. Makes me really happy to hang out with you guys. Hope you have a good weekend. Trade wisely. Oh, did you say something? Why did I not see that? PayPal? Ghost? See, I can't get off if someone still has a question out there. I'm such a sucker. PayPal. PayPal's a falling knife, my friend. Has been for a while. I can't tell you when this thing's going to stop. There, close enough. It's just a falling knife. Sorry. Like I'll admit this to you. I owned PayPal. I owned PayPal around the 50%, and I forgot I had it until I think basically into 2022, and I closed out at 100. Huge loss that I shouldn't have taken, but I'm glad now that I did. Like I literally forgot it was in this other account that I did. Sometimes I have this Schwab account that I don't use very much, but I bought some PayPal in it when it came to this point. Forgot I had it because it wasn't in my main trading and investing accounts, and I didn't notice it until it got around 100, and I was like, oh man, like maybe I just let this thing come back. You can't let yourself think that, because that $100 has now turned into 60. It's 40% less than when I didn't want to sell it because it surely would come back. Hashtag this is not financial advice, but if you're long this, you give yourself a spanking at whatever price, and you learn from it. That's my thoughts on that. All right. Thanks, guys. Have a good weekend. I hope that helps. It may not be what you want to hear when it comes to Bitcoin and PayPal, but it's my honest opinion from all my experience. So, again, trade wisely. We'll see you guys next week. Bye-bye.